What's up, guys? It's April 25th, 2025. Had a nice day in the markets. We opened up with a range, we rallied, and went sideways again. I'm gonna give a quick shout out to all the members. We got a couple new members, guys. If you're just joining the YouTube channel membership, message me on Discord. My name is Ding Dong, and I'll add you to the private channel because a couple of you joined and I can't find out who you are. So yeah, if that's you or you want to join, message me in Discord and I'll add you to the channel. We talk about trades. Sometimes I post my trades with limit orders sitting there. And tomorrow I'll be dropping a video about measured moves, how to take a trading range measure move. Sometimes you could fade 1 hour, how to do leg one equals leg two measure moves, and just things like that. And it's gonna keep growing and growing and growing. So I appreciate all you guys joining the membership, and let's do this breakdown. Try and keep it under 20 minutes. We spilled over a little bit yesterday. So daily chart. Leg one, first pullback. Now we're in the channel phase. Leg one, pullback, leg two, pullback, leg three. We go sideways. There could be 4 legs here with this bar, actually. We go sideways. After sideways price action, that shows us that the market cycle is resetting, and we're waiting for that breakout. We break out. When we break out, the probabilities for trend continuation shift slightly to around 60-40. So here, the market's more 50-50, trading range price action. Now we get the breakout. We get a good breakout with a gap from this bar to this bar, so the probabilities for trend continuation go up. Here's that leg two. Leg one, pullback, leg two, pullback, leg three. Higher low here, that's the leg four. There's 3 types of trend line breaks. If this was the first leg, so leg one, pullback, leg two, new low. Leg one, pullback, leg two, equal low. Leg one, pullback, leg two, higher low. We got the third option, higher low. That's for the bulls, bad for the bears. This tail, this bar right here, it sells off. It shows us there's a tail down here, so bears are trapped, and we rallied to almost the higher of the range. Bears are now trapped, and since we have a bear channel against a bull channel, we're in a trading range. That is the definition for trading range. It shows two-sided behavior. After this big bar, we have a pullback that tests the lower third of it, but then the bulls rally. So we're testing right around here. We rally, then we have an inside bar. Inside bars are the only type of bars are not breaking out, and then bulls try and get the breakout, but then they fail around the EMA, and bears get a few legs down. Leg one, pullback, leg two, pullback, leg three. This bar is testing this swing low here. Bears try and sell off, but it ends up being a failed breakout, rallies, and now that's where we are today. Leg one, we have a gap up. Leg one, pullback, leg two, pullback, leg three. Starting to have climactic price action around this breakdown point, so it'll be interesting to see what happens next week. Here's a 15-minute chart with what day is this? So we have the 23rd to the 25th, so there's 2 days of price action right here. Gap up, pullback, so leg one, pullback, leg two, pullback, leg three. Here's another form of okay, let me restart. Gap up, leg one, pullback, leg two, pullback, leg three, wedge top, and it sells off after leg three. Probabilities for trend continuation go down, and it sells off. Leg one, pullback, leg two, pullback, leg three. We now have a bull channel against the bear channel where we are in a trading range. Bulls get a double bottom. Bears that get short here are trapped, and they're going to short more on the pullback, and they do that. When it gets to the pullback, they're going to make a profit on their second entry and get out, break even on the first entry, buying back shorts. When they buy back shorts, bulls are betting we're in a trading range and they're buying range lows. So now bears and bulls are buying the market, and that caused this rally here. This rally was still part of a trading range, and we ended up breaking out of that trading range, not by much. We were going more sideways now. However, the 3 legs we could count, leg one, pullback, leg two, pullback, leg three, pullback, 4. Or if you want to reset the count here, could say leg one, deep pullback, leg two, pullback, leg three, and now we're starting to go more sideways. Again, there's 2 types of trend line breaks. Leg one, pullback, leg two, new high for the bulls. Leg one, pullback, leg two, equal high for the bulls. And then the third option, leg one, pullback, leg two, higher low for the bears. And right here, it looks like we're getting equal highest or higher low. We don't know what's going to happen on Monday. We could just have a gap up and keep going, or we could be in a trading range still. Here's the swing low. Here's the swing high. So, yeah, a lot of things could happen. We have a gap down, bar one. It's a bull bar. It has a bull close, but it has more trading range price action shown between the 2 tails. Bar two, bull bar closing above its midpoint, but has more tail, testing bar 81. Look at the tail on, what is that, 79. There are more sellers. Bar 3, bear bar closing on its low, breaking up below the EMA. At this point in time, That's always going to make me chuckle. I don't know why that happens. At this point in time, we have the breakout here. This bar starts the channel phase, and then the market starts channeling for, excuse me. So here, breaking out, this bar is an opposite bar, starts the channel phase, and the market starts channeling for 3 to 4 legs up. And then the market cycle tells us after a channel, we enter a trading range. Here's a bear channel, here's a bear channel, and here's a bear channel. So bears are making money. We are definitely in a trading range. Bar 3, bear bar breaking below the EMA. Bar 4 is followed through, and with bar 5, now we have a gap. It's just trapping bulls. Bar 6, bad follow through for the bears, but it is 4 bars in a row. In a trading range, we can expect a deep pullback, and that's what we get. Bulls get a micro channel here. Bulls get a micro channel here. There is a gap, so we know bears that have limit orders set here are trapped. Bar 7, it rallies, sells off below its midpoint, so not good for the bulls because they want to see it close above the midpoint and above the EMA. Bar 8, big bull bar closing on its high. In trading ranges, we can get climactic behavior, so this might be a vacuum rather than a new breakout. Bar 9 shows follow through, and it's a 3-bar bull microchannel. A lot of people may be inclined to buy here, buy lower. I know I got trapped on this trade, and that's just the name of the game. It ends up being a wedge bottom. Leg 1, pull back leg 2, pull back leg 3. Bar 10, bear bar closing on slow. Very big bar. Bar 11 sells off, becomes climactic, and then closes on its midpoint with follow through. Bar 12. Lots of tails, so bulls are willing to buy lows. You know, these are bear bodies, and we have a gap, but it's also the second leg down. Leg 1, pull back leg 2. Trading ranges are notorious for second leg traps, and then look at 13, bad follow through, sells off and rallies. There's also a fractal 3 legs down right here. 14, bull bar closing on its high. 15, bull bar closing on its high with follow through. 16, leg 1, 150% pullback, leg 2. This momentum here is strong to get its own second leg. Leg 1, pull back leg 2, pull back leg 3. Here's a wedge bottom. 16, 17, bear bar closing around its mid. It's a small bear bar. It has a bear body, but there's more tail, and so there's a push down here. So that's one push, push 1, push 2. We have a big tail on 18. Bears sell off, but then rally. 18 tests the high of 13. Breakout. It's a breakout point. So we have a wedge bottom and a bull regime above the EMA. Give me 2 seconds. So wedge bottom and a bull regime. And we have another leg here. And even this leg is comprised of 3 legs. Leg 1, pull back. Leg 1, pull back. Leg 2, pull back. Leg 3. And that creates its own second leg. Leg 1, pull back. Leg 2. 22 breaks the trend line of 21. So now we're in the third leg of 23. It's a bull bar closing on its high. But we're also testing right here, which previously bears broke down. And then we see that with 24, pull back. 25. 26 sells off and then closes around its midpoint. 28. Bad bar for the bears. There's actually more of a rally than a sell-off, and we can see that with this tail here. So bulls were inclined to buy this because they thought it was a pullback. And we know that through this rally. Bears cannot make a new low, so if you're short here, ask yourself what type of short are you looking for. If you're long here, I would also get out around 24 because now you're risking the market collapsing like that, or at least testing the range lows. 28, good signal bar. Not a lot. The context is interesting because it's of a head and shoulders reversal. That just means the bears tried 3 times in one direction. Push 1 failed, push 2 failed, push 3 failed. 28 looks like a good signal bar for the bulls, but it's not closing far past the EMA, so that makes me hesitant. I wouldn't buy this anyway. It's not part of the system. Bar 29, big bull bar closing on its high, produces a gap with bar 30, but bar 30 is bad follow through. And then we start to get a bull channel with bars between 32 through 35. Bull channel overlap. We can see the dojis. These are mostly dojis, so that's 2-side trading. And then we get a breakout 35. Again, bad follow through at new highs 36, but that produces a gap that also gets its own leg too. I talk a lot about how each leg will have 3 minor legs in it. So here's leg 1, pull back. So you could say here's leg 1, pull back, leg 2, pull back, leg 3. And then each one of these legs, leg 1, pull back, leg 2, pull back, leg 3. And then this leg here, leg 1, pull back, leg 2, pull back, leg 3. This whole price structure strong to get its own second leg, leg 1, pull back, leg 2, tail on 46, pull back, leg 3. So this whole leg strong to get second leg, that makes bar 40 a first reversal. shallow, better buy. Bulls made 1R before bears could short this bar. And you can see that with this leg here. 41, bull bar closing on its high, but not far past 40. 42, follow through. Hold on, we'll keep going. I'll talk about my trades after. 43, bad follow through. This could be a third leg. Bears are going for a double top. However, then we see another breakout here with 44 and 45. We produce a gap. 46 sells off and then rallies. So now we know there's a tail. This is a pullback on a smaller time frame. And then 47 rallies, closes on its midpoint. 48 big bull bar closing on its high. We're in the third leg, so if you're buying this, just be cautious. I personally don't think it's good to buy this high in trading range behavior. We know there's trap bears here, so they're gonna try and get a break even trade. 49 bear bar breaking this trend line. So now we're in this fourth leg. I think it's safe to get out long as we see a trend line break. Leg one, pull back, leg two, leg one, pull back, leg two, pull back, leg three, trend line break starts the fourth leg. And you can see bulls could not get 1R after buying 49. So this was the first reversal. This is the second or third reversal, depending on how you count. And I think I might throw a lot today. Thank you for being patient with me. Bar 50, big bear bar closing on slow that produces a gap of 51. This big bear bar is a micro channel on a smaller time frame, and then we see the first reversal, 51. Better short than a buy, even though we had all this. There's still some momentum left over from this bar, and then it sells off for 2 to 3 more legs. Leg one, pull back, leg two, pull back, leg three. Bad close on 52. If this bar is so strong, why did bears were taking profits at new lows rather than holding? 53, bears short of this, but then they didn't get very good follow through. 54, it closed a bull bar. We are still in a bull regime. Bear setups will tend to fail, and there's starting to lose my voice. I was doing some talking, and there is a complete structure being a wedge bottom. Where is my pen? Leg one, pull back, leg two, pull back, leg three ish. They could say 4 legs. Leg one, pull back, leg two, pull back, leg three, pull back, leg four. 54 is testing the breakout point here. Doesn't quite touch 28. I think that would have been a good buy, but there's a small gap opened. Then we see 3 bull bars rally. 54, 55, and 56 produces a bull gap. I got trapped short here, but then I took it again here and made it back right there, called it a day. 57, first reversal after 3 bull bars. This used to be my old system, 3 bull bars with a gap. We know bears are trapped. When they see 57, they're going to try and get out a break even. If they get they're going to short here and short some more, trying to get out at their original entry down here. I said that wrong. They're going to short here and short here, hoping for a 50% pullback. This situation never happened, so bears were forced to buy back shorts, creating 2 more legs. Leg one, pull back, leg two, pull back, leg three. And then this entire leg is 1 leg, how we just talked about here. There's typically 1 big leg with 3 minor legs in it, and then we go for a pullback. 3 bull bars, but it's the 3rd leg, and then we see back continuation of 64. 65 sells off, strong to get its own 2nd leg, 66. 67, bull bar closing on its high, but it could be more of a pullback for this leg down. And then we see another 3 bars, 68, 69, 70. We're going more overlap. This is a tight trading range. It's very easy to buy highs, short lows, and get trapped. 72 gets followed through with 3 bars, but then bad follow through 75. 75 is testing the 55 high, and it rallies for 2 more legs, like 1, pull back, 2, pull back, 3. Pretty cool day. I do think today was challenging. I took, I think, 2 losses. The trades I took were, I was shading Nasdaq. So on Nasdaq, this printed bullish. I put a limit order here. I got trapped on 11 and stopped out pretty quick. Okay, that happened. Then I got back just a little bit above break even. Right here, I got filled on 15, out on 18. On Nasdaq, it tagged for 1R. Then I didn't get filled for this entire rally. Something interesting happened. I shared it in the Discord. I was pretty surprised. I put a limit order above here. This was a bull bar. And on this bar, I am not even joking, guys. I think I was out the trade in 2 seconds. And it was a winner. Because this bar sold off, bounced off, and tagged me out, and it happened so fast. I had to like rewatch the video. I was like, wait a minute, what just happened? That was an interesting win. Then we have and then I took a loss here. I put a limit order here, trapped on 57, tagged out on right around bar 59. I had 1 more trade. I was looking to short the high of 49, and I took that, almost stopped out. But I also was betting that 49 was the high of the day, and I got filled for 1R and 67. Now, where are the micro channels that led to a profitable trade? Here's a 4-bar bear micro channel. You can go for 1R trading range behavior, so it's going to be a deep pullback, delayed second leg. The high of the trading range was where the second leg started, so bar 9. The high tick on 9 is the start of the second leg, sells off for 1R. Then bulls get 1R here, or excuse me, bulls get a micro channel here, and they want 1R. But unfortunately, you know, if your stop is 1R, you're not going to get tagged. You will hit 1R, but you're going to have to sit through about 20 minutes of a pullback. It's a complex pullback because there's a wedge bottom here. Push 1, push 2, push 3. Here. There's a couple ways to count this. Leg 1, pullback leg 2, pullback leg 3. Or if you want to say this is the high of the day, you could reset the count here. Leg 1, test the breakout. Leg 2, pullback leg 3. Bull max. So 1-to-1 was not met of today's range. We can just kind of eyeball that. Bulls might try and complete that on Monday. But in terms of, here's a strong bar that got 1 to 135. It's a 1-bar thing. Another 3 bars here because there's a pullback 36. Put it below. I don't like 39 because it broke the trend line here. But if you faded this, you would make your 1-to-1 right here. 1, 2. So here's another. What is that? 6 bars. 1, 2, 3, 4, 5, 6. This is a very deep pullback. You put it here. That's the start of the pullback, or you can put it here and you make your 1R quickly. 3 bars in a row. Put it at the low of 57. 1R is not met because that would be a new high of the day. Or you could put it here. You could put it here. The measured moves, I do it from the start of the pullback because then I can see how much room there is to play. That doesn't mean I'm entering there. That just means that's where the pullback starts. So that's where I start the 1R measured move. All right, guys, that's just about 20 minutes. I hope you guys had a good day. I had fun talking to you guys in the Discord. Please keep asking me questions. To all the new members, I appreciate you guys. Keep asking me questions. I'm looking forward to talking to everyone on Monday and over the weekend. If you learned something, share the show. Don't be a hoe. Everyone have a good, safe weekend. Talk to you later. Bye.